what is Blue Ocean? Probably the most important question I can answer for you, aside from telling you what we do that's unique and special. We are an alternative trading system for U.S. equities. So we're not a stock exchange. We don't do listings, but we do enable people to have an opportunity to trade on a alternate venue from those stock exchanges, any U.S. equity that is part of the Reg NMS system, the national market system in the U.S. So not OTCBB, but anything NASDAQ listed, NYSE listed, etc. We trade exclusively at night at this time, so 8 p.m. Eastern to 4 a.m. Eastern, and amusingly, we're growing quite quickly, so I felt it was appropriate to say we're growing at the speed of night. Just my own little pun here. Now, what makes this important and why this is relevant is if you think about the last 12 months, we've had extremely high volatility, uncertainty in different aspects of worldwide events, interest rates, all kinds of things, and U.S. equities are generally the second most interesting market outside of a domestic market for any particular country-based investor. So if you're on a U.S. retail online brokerage, you'll have U.S. equities. If you're lucky, you have CSE and other Canadian equities. If you're trading in Hong Kong or in India or in Europe, you'll have your primary domestic market and you'll have the U.S. and then maybe some other stuff. And so generally that means that you also are very focused on what's happening in those markets, but most people will still be, daytime traders. They'll trade what's accessible to them during the hours that they're at work or the hours that they're awake. And U.S. equities have been something that has historically followed a New York-style clock originally. So 9:30 to 4 p.m. would be the core market hours that everybody knows. And then progressively, we had a creep towards early morning hours overlapping with Europe. And NYSE in 1991, I think, extended their trading by 1 hour to accommodate that. And progressively, it's expanded now before Blue Ocean to be a 4 a.m. to 8 p.m. market. And so what we essentially did is we looked at the next slide and we said, that's the Valla-Paris circle. There's an 8,000 kilometer diameter circle that has more than 50% of the world's population in it, also more than 50% of the world's capital in it, and that group right there sits within about 8 p.m. our time to 4 a.m., which is about their 8 a.m. to 4 p.m. And that's in an underserved market in that respect. As markets have become incredibly electronic, markets are fast moving, you have incredible amounts of cross-listing as well, so you have U.S. listed instruments that have a primary market in those time zones or anywhere else, or they're affected by global news events. It's very important to be able to actually serve this group. And so the product that we sell as far as U.S. equities sells itself as far as what that is, why you would want to trade those things. But to deliver that service within the times that were otherwise unserved was an incredibly attractive opportunity, which was immediately understood by the parties that we went to when this was a new idea and began to get traction. And so that's really the core of what Blue Ocean is. And I point out we're the only ones, as far as U.S. ATSs, that are operating during these hours. There's about 30 ATSs. So there's a lot of competition and a lot of liquidity for U.S. equities. But up until we started, there was nothing during this time zone. So it's been essentially all blue sky opportunity, or blue ocean opportunity, I should say, in terms of creating volumes from a time when it was zero over the hours that we were part of that market. And so, very simplistically, the world has gone fully electronic. Anything happens anywhere in the world, there needs to be a way to react to that. Risk is a problem. If you look at things like Silicon Valley Bank and its disruption over a weekend in terms of its potential bankruptcy, that was something that was being decided when the markets were meant to be closed so that you would reduce volatility. As soon as markets were opened, you would assume that the market is going to react to that and any cascading effects that took place there. In our case, as the venue that opens on 8 p.m. On a Sunday night for the Monday session, we're actually the first place that you could react to something like that, which is a strategic advantage for us and was discovered at that time by some parties and for other reasons by other parties when other world events have been relevant for them to begin to trade. And it's not as if 24-hour trading as a concept is a new thing. You can do it in FX, you have it with a lot of derivatives markets, even something as simple as the S&P 500. There's a futures market, there's an options market. A lot of those are closer to 24 by 5. Why would you not have the underlying do the same thing? And so that, again, is really what we've created, is we're not the 24 by 5 market ourselves, but we insert that portion of the market to enable a full 24 by 5 when you contiguously put us together with the incumbents during their hours. So this to us was essentially the key to really be the value proposition. And of course, if you're a market operator, you have a unique selling proposition like this. You can charge a fairly attractive rate, not only on things like transaction fees, but also on market data. And just to be clear, those are our two lines of revenue. We don't have the third leg, as Richard was putting it earlier, with listing fees. So those are the two sorts of income that we have. So simplistically, growing at the speed of night, as I said earlier, my colleague was here last year, Matt Horsk. He's done an incredible job with the technology side of things. Our CEO, Brian Hinman, has put together a continuing fantastic team. I joined in January myself. When I got here, we were doing, give or take, under 1 million shares a night. As of recently, we're doing anywhere between sort of 15 million on an average night, and we've had spikes up into the the 30s and higher on a per night, so 8-hour session share basis, depending on market volatility. And we're getting paid per share that is transacted on the trading side of things, and we're earning a relatively stable amount per client on a market data side of things. So a great balance as well of annuity type revenue as well as upside potential revenue where volatility takes place and there is an opportunity in the market to be able to capture additional upside value in that respect. So like I said, we trade starting at Sunday night at 8 p.m. So that initial session for the Monday market has been an incredibly interesting discussion to have when you start talking to more advanced and sophisticated traders, whether it's hedge funds or high frequency trading firms and the like. The ability to take their risk and start to do something meaningful with it at that hour has been incredibly attractive. But even then, not just to them, but also to the retail crowd, which you'll see here. So over the course of 2023, these are a selected list of clients that we added to the market. I can't disclose everybody. These are the ones for whom we have permission to disclose their names, but you'll see people like Robinhood and Interactive Brokers. So Robinhood, everybody knows, generally speaking, infamous in some cases as far as what people have done trading through them. But if there's an Elon Musk tweet at 3 o'clock in the morning, somebody in the US has the ability to react to that, send an order, and execute whatever it is that they may wish to react based off of that. And that's just the thin end of the wedge, the start of what we hope to see from a North American markets perspective, which is followed later by Interactive Brokers that generally serves most of the world's participants that are interested in trading who have a more sophisticated approach, but very exciting. And this has really been the huge portion of growth that we've had is over 20 brokers in South Korea alone joined the platform over the course of the year thus far. And we're not done in that market yet, but it's by no means where we're going to stop either. Because we've been adding in Hong Kong, for example, Futu Bull serving a Chinese-speaking audience. We have many more in some of those related markets that we'll be working on as well, right the way through to Malaysia, Indonesia, the list goes on, and progressively westward as well towards India, where conveniently over the last couple of years, the Reserve Bank of India has actually loosened capital export rules to allow for investing in foreign shares, and one retail online broker's website alone, for example, lists having 10 million retail accounts on their platform, and they're not even the worldwide number one, or sorry, I should say the India-specific number one. And as we begin to really accelerate our sales and our growth process in terms of our marketing, reaching some of those audiences is going to be incredibly attractive to us as we begin to make it known that we're available, we have the right infrastructure in place, and we can welcome them to the business. And I think the most exciting piece, and this is really something when I was here for the AGM in June I couldn't disclose, but was underway, is what we have coming next for a major key market for us, which is Japan. From a market size perspective, I don't need to tell this audience what a powerhouse Japan is. The financial markets there are very well developed. It's a very advanced economy, and there's a lot of capital and a lot of interested parties who are connected to the financial markets. And it's a very insular market in a lot of ways. JPX, which is the Japanese stock exchange conglomerate, includes the Tokyo Stock Exchange, who is the investor in Blue Ocean, provided net new capital. That's growth capital for us to be able to increase both our technology spend, our operations spend, and our sales and marketing spend. But as much as that was a very, very interested party to help us reach that domestic Japanese audience. So selling market data to them, delivering that local infrastructure to be able to observe and know that Blue Ocean exists and track our market values was incredibly important to us as part of what we're doing with them, and also to help the, call it 80 brokers that they have access to as part of their trading client base to be able to reach Blue Ocean as a venue for their interest in trading U.S. stocks from a local Japanese broker setup and connection, which we're underway now in terms of planning and that technology and that business process to make that a reality. So we're extremely interested. And as I said, South Korea alone has already brought us a huge amount of growth over the last 6 months. We've added 20 firms there, give or take, and we're looking at another 80 or so here, and this is just scratching the surface. So we're extremely excited about the opportunity that we have there, and we're really only talking about a small part of the world so far that we've been able to really wrangle and penetrate, considering that the team has been doing this for, call it 2 years or so at full scale, and just getting an incredible amount of momentum now. And if I can speak to JPX as well, and TSC specifically within the organization, the value that somebody like that looks at with a marketplace, and the reason that we're now closer to a success by every measure, is starting any kind of marketplace. A liquidity venue is incredibly difficult. You need both buyers and sellers, and you won't get one until you have the other. And who's first to the gate is very, very hard to produce. So what we were able to do, starting a couple of years ago, was get a couple of key market makers, Jane Street, Virtu, names that might be familiar to this crowd, with whom we've had a very close partnership, start to provide some high quality quotes, and then progressively go to those retail firms that we've just been mentioning here, and try and explain to them why this is interesting to now trade these same U.S. stocks that they've had during the day, but to have that during the night. And so as some of that initial business started to come through and that momentum started to build, we now have much more of everybody else who was sitting on the sidelines coming to us again, whether it's other retail firms or whether it's high net worth fund managers or sophisticated traders who are operating quantitative strategies, who are looking at just a critical mass of volume that is taking place, that has improved the bid-ask spreads, which has tightened the market and made it more effective and efficient, has collectively made this, essentially a very successful looking, interesting venue for matching trades in the overnight hours. And I think they appreciated very strongly that that was a difficult thing to achieve, even though the product set as U.S. equities are concerned is quite understandable and quite attractive. But to start a net new venue during a time zone that effectively was uncovered was a huge lift, and has been quite successful thus far for us as far as fulfilling that critical mass that we needed to reach. So we're very, very excited about their endorsement in that respect that came from JPX. So very straightforward. 2023 has been a fantastic year for us so far. We've done, call it $1.5 billion shares, about $21.5 billion notional value over the last 10 months or so. And a lot of that has been smaller numbers towards the beginning of the year, with substantial numbers towards the recent months that we've had, with really a huge amount of growth coming sort of in from the summer and onward, but setting new records really month after month from January to current, depending on what you were counting in terms of notional share count, things of that sort. The company, as I said, is really well positioned as far as our favorable business construct as well. So we're taking recurring revenue from a market data perspective. So these are contracts that pay, say, thousands of dollars per firm per month on a relatively fixed basis on a 12-month term initially. And that's a great baseline of revenue to have. Being intellectual property, it's also incredibly high margin. And then we have the trading fee revenue, which allows for us to then collect incrementally per share that is traded on the business, whether it's due to volatility or just due to aggregate growth, a nice upside to that as well. And one begets the other. The more trading you do, the more the market data is worth, and the more visibility you have in terms of people looking at your market data on different platforms, the more likely you are to get volume, because people are aware that you exist and they can send order flow to you. And we're also well positioned from the perspective that though we're going to these Asian markets that we're talking about as a initial batch to whom we're reaching out, we're insulated by U.S. broker dealers as our primary clients. So if you're a retail individual, you can't open an account with us. If you're a Hong Kong broker as a firm, you can't necessarily be our direct client. You have to come to us as a FINRA regulated broker dealer firm. So let's say Samsung Securities in South Korea has a USBD entity. They can be a direct client of ours. Their competitor down the street in Seoul cannot. So they'll have to find a, let's just say, TD Cowen or Morgan Stanley or whomever facilitating broker-dealer to deliver that flow. And that also then means that it's very easy for us to onboard these clients because we're onboarding the first layer of essentially funnel partners. So we might be able to get 20 or 30 downstream clients for every one of those banks that we bring on, because they are bringing to us all of their aggregate clients once we're on that list of available venues for them. So really great scalability with a relatively small team with a relatively low cost base in that respect. And I think it's also important to mention as we look at this, and I get to the next slide here, which is about volumes, that where we are in terms of our position for overall market volumes in the US is going to continue to expand significantly and very quickly, because it's not just about saying to this audience that there is a chance to trade US equities during times that were not previously available, or that now these people will choose to trade who may not have otherwise wanted to trade because this is available during their market hours. It's also about interconnectedness. So I said there were about 30 ATSs in the US that are competing during the core market hours for US equities trading. The more you have venues of that sort, the more complicated the market structure, the more likely you are to then also have competition between different market makers trading and creating arbitrage amongst themselves. And so the more competition, the more complexity you have, the more market volumes generally increase on that basis. And for us, that means that we discover things like Hong Kong listed shares, which are now tradable during Hong Kong hours, but on the US venue that have a secondary listing there and not just the primary Hong Kong venue, become cheaper to trade with Blue Ocean. Apparently, this is anecdotal from some conversations we had recently, and so order flow that was going to those Hong Kong Stock Exchange shares is actually coming to Blue Ocean instead. Or you have arbitrage traders who look at a Japanese listed core market equity. They look at the US ETF or ADR that is available for that, and they do a foreign exchange based arbitrage. And so we sort of create volume that was impossible to have before. And so it's not just that we're taking a bigger chunk of a pie, we're making the pie substantially bigger itself. And I think this graphic on the left is really stark in terms of telling you where we are in terms of our cycle of growth here. The core market hours, call it 10, 11, 12 billion shares a day, give or take, 9:30 to 4. 8 hours a day overnight, we're doing, call it 10 to 15 million shares a night. That's a third of the total clock. And the pre and the post market hours, which are 4 a.m. to 9:30 or from 4 p.m. to 8 p.m., are about 700 million shares a night, which is still many, many times greater than what we're currently trading, and even alone provides us a huge opportunity to dig in to even that size category before we start making a meaningful chunk in this overall market pie. So we're very excited about the upside opportunity in terms of where we're going with this, just to grow our current status in the non-core hours and start making a meaningful impact on this overall pie graph here. And you can see over there on the side just a quick information graphic about where we are in terms of our hours overlapping with the rest of the world, just to make it easier to understand who we're targeting in terms of those trading hours at this point. So simplistically, volumes are expected over the coming years to increase, I would say, at a marginal rate. It's difficult to be 100% certain due to market volatility, due to world events, what exactly will happen. But generally speaking, core market volumes are going to increase. We see the pre and the post market volumes generally increasing. And we're, of course, forecasting that as we take a bigger and bigger piece of this overall pie, that'll be fantastic for us. And we don't see this as being something that will shrink in terms of the total number of absolute shares traded. So we're quite excited about continuing to ease into our growth curve here as the months and years go on across the hours that we trade now, with the overnight session, which is not listed here because it's so infinitesimally small today that you wouldn't even notice it on these graphs. But as we also look at what we're doing from a 2024 and beyond perspective, where we're forecasting not only to continue to trade this 8 to 4 p.m., to continue to focus on those Asia market hours where we've seen incredible opportunity and growth thus far, but to even begin doing things like polling our clients on a proactive basis. Would they like to see us expand our hours to the pre-session, to the post-session, to make that 8 to 4 p.m. possibly up to 17 and a half hours per day has become an interesting question to discuss. And so far, that theoretically would be attractive to them. and that would enable us to add even more value to the platform, where we can add new types of services as far as order types, as far as market structure, which is attractive to them to concentrate their activity with us and help increase, again, our likelihood to capture order flow through even more of that clock as we compete into that pre and post session volume opportunity I was just mentioning there as well. Difficult to know what the world brings, but we're forecasting quite a bit of volume opportunity for Blue Ocean based on everything I've just explained here so far. I won't make a financial forecast, but I will say we're very excited about what that means, both the trading revenue side as well as the market data side. And our cost base generally is staff and is technology. As Richard can attest to, once you have a relatively stable cost base on the technology side and you have good operations, it's a matter of sales and marketing to make it known that you exist, to make that solicitation to your different infrastructure partners, to get yourself onboarded with the banks, the brokers, the market data vendors, the Yahoo Finances of the world for the retail population to discover you in general. And once you have those things in place, it is a much easier effort to then go out and seek your client base wherever you may find them amongst either professional or retail traders. So very, very excited to share this with you. We have much more to come, and just consider this the tip of the iceberg, or sort of pulling back the dark a little bit. And I think on that pun, I will just emphasize one final important point, which is that we are what's called a lit trading venue. So if you trade equities during the day, you can see the order book, you know what's taking place in that market, you can see what's available to buy or to sell in terms of the quotes. We are in that way similar to any other exchange-like venue. A lot of ATSs are what's called dark pools. They do not disclose what is available to buy or to sell. They just allow you to place an order and hopefully transact against an unknown set of sizes and counterparties. So in that sense, we're also actually bringing some daylight to this so-called night session, and hoping to increase market transparency and market quality as part of our overall activity. With that, I've given a lot of information, but I'd love to take some questions. Please.
The last time you were here, you had talked about not being on Bloomberg, and I'm
Correct.
wondering if that is moving forward and what that initiative looks like.
You have an excellent memory, and you're absolutely right. We are still not on Bloomberg at this time. I couldn't give you a forecast for when that would be fair to say we will be on a Bloomberg terminal, but that's really a question of our client-side demand. So we can go and press on Bloomberg as much as we're able to tell them that we'd like to be there. They need to see, every bulge bracket firm in North America, as well as any other major market they cover, tell them that they need that to happen. And there's a priority queue there. So we're working through our process to demonstrate that demand and get there. We are on we are on ICE, we are on Refinitiv, we are on every other major market data vendor you might expect us to find at this point, but we're not on Bloomberg just yet. Other questions?
Just one quick question. I know you currently said Blue Ocean's looking to have more dealers in the U.S. and obviously in India, as you mentioned. Looking beyond that, would there be any interest in bringing foreign equities, such as from the TSE, over to the U.S., or is that not really a possibility?
So I think right now the biggest market opportunity is to take everything that's already in that U.S. scope, and we're talking 12,000 plus different equities, and make the most of that we can, because that's what we're set up for from a reg perspective, step one. And so that includes a lot of cross listings. So there are India or European or Asia-based equities which have a secondary availability in the U.S. That already solves a lot of the potential. There's a huge amount of interlisteds with Canadian markets as it is already. To do what we discussed with Richard is another step of some work, but it is entirely doable. There's just more to do there than to just open up a couple of shares for trading.
In terms of days when you see spikes in overnight trading, is that generally driven by macro events, or is that name-specific events like Elon Musk?
It depends. So we have seen some where a small cap stock will have a specific news event and they will have a massive jump in their own volumes. Retail, has discovered that name or whatever the case may be. We've seen other cases where I mentioned SVB is just a good example where that's a contagion issue, and so now there's a lot of general market volatility, not just in financials, but everything else that sort of cascades from that. So I don't have another good case to give you an example of, but I would say it's a 50-50 mix depending on what's going on in the world. Macro will drive a huge amount of volume in larger caps. Name-specific activity will be much more concentrated in smaller cap names, and will be sort of contained in that respect.
Yeah, I'll give one example, John.
Please.
The night that NVIDIA
Oh, yes.
had when NVIDIA blew the doors off the market, Blue Ocean actually set the market. So the activity that was done, the price discovery that happened on Blue Ocean, in fact, reflected where the stock opened the following morning in the United States, which was awesome.
And to that point, it was our single highest by volume count traded name that evening as well, by a good margin. That's a very good example. Brendan, please.
You graciously handled my young friend's question. He has a terrible stutter. He meant CSE companies, obviously, when he was talking.
Very well understood.
When he was talking earlier. Interactive brokers. Do you work with them just in the U.S. or worldwide? That's the first question. Second question, whether it's Interactive Brokers or another technology firm or somebody else, what is the competition that you see, and what's the runway that you have? Do you expect?
Sure. So Interactive Brokers, I'll address first. We work with them at their HQs, and once we're available, and as we are now and have been for a number of months available through their platform, that is globally to wherever local laws would allow them to make that available. So a Canadian user, a US user, a European user, an Asia user, all have the same ability to send orders, as far as I know, on their price list by the same pricing to Blue Ocean during the hours that were available. As far as the runway question, we're well capitalized now. We have very attractive revenue streams. I see us investing in the technology side of the business, also in sales and marketing to continue to make ourselves visible. And we're looking at an attractive pipeline on every front of revenue as well, based off of that.
Sorry, I misspoke my question then.
Yep.
Competition, like who can compete with you now, who is likely to compete with you in the future, and would any of your current customers, suppliers, or people that you're so happily partnering with turn on you? Because that sometimes happens in business, I've read.
It's anything's possible. You're absolutely right. In terms of competition right now, I put it in two categories. OTC, so there's always some specialist who may be willing to sell privately through their inventory, and that was what existed before, and that would have a much less attractive spread and much higher cost in every measure. And then the other side would be where we have these interlisted equities trading during those hours. You could make the argument that the Japanese Stock Exchange cross-listed or HKEX cross-listed might be an alternative for certain specific names. Otherwise, there really isn't current competition, which has made us very happy about our position in the markets. In terms of future competition, we're eyes wide open, expecting that will happen at some point. It would be remiss to think that we'll be the only ones for the foreseeable future. Realistically, it takes 12 months to get going on something like this, just in the basic sense of extending your business if you're already trading venue to our hours, the filings, the technology, the operations, what have you. So we have a great runway in that sense, and as we become and continue to have already been the de facto point of reference, we embed ourselves as sort of that first gateway for people to trade in the overnight hours. And I equate it somewhat to the Dow Jones Stock Index. It's not a great measure of overall market quality, but it was the most popular index for a long time, and so it's become ingrained in that sense as a venue. I would say any of the major U.S. global exchanges are potentially somebody who would start something like this, but there's a lot of complexity for anyone to go through and understand as far as how you trade during these hours, because nobody else has done it. There's a lot of things that we had to answer the question for the first time, so we built a lot of intellectual property in the sense of knowing how to do things that just there was no playbook for before. And so for anyone else to learn that again would take them some time.
Thank you.
No problem.
Just going back to the data side of things,
Sure.
I think you've got a target of 60% of revenues would come from data in the future.
So we're about 50-50 now. I believe in the June forecast I might have given that number. I mean, that is still a likely case. I think it's not too dissimilar if you look at the overall evolution of revenue composition for the last 20 years of all equities markets. You were 95% trading fees in the late 90s, early 2000s, and progressively, listing fees always were there, but market data became the go-to source of revenue, and transaction costs were always under compression, and you had tightening spreads, you had increased volumes because of the efficiency of the ability to then trade with reduced cost overall, and price discovery and complex complex markets with multiple venues was where data made that money and that interest possible for all venues, ourselves included.